Hello, G-Traders! I would like to present you with a recap of the New York trade. Besides, our experts are glad to share their forecast with you. Global investors pin hopes on a new round of talks between Russia and Ukraine, longing for some signs of progress. Markets reversed sharply during a pause in the stream of dismal news. Oil prices, the US dollar and the US stock market changed dramatically their trajectories. The major stock indexes halted a losing streak that lasted for a few days and rebounded by over 2%. The Nasdaq made the best jump, having gained 3.6%. Now let's discuss everything in detail. The S&P 500 closed 2.6% up to 4,248 points. The market owes its reversal to positive expectations for the talks between Russia and Ukraine. After the parties had expressed readiness to reach a compromise, the US stock indexes revealed the strongest intraday gains in more than 2 years. Moreover, investors regained risk-on mood because of an 18% plunge in the oil prices. In this context, Wall Street investors eventually resumed buying stocks. Today, commodity markets regained footing again and stock markets retreated in parallel. So, stocks are again following the overall downtrend after a serious upward correction. It became known that the talks in Ankara did not bring any diplomatic agreements, though the parties said that would carry on searching the appropriate solutions. Technical analysis does not give any hope for a revival of an uptrend soon. Stocks are set to trade in the red in the short term. The S&P 500 is expected to halt in the corridor between 4,240 and 4,320 points. In the meantime, the US dollar showed the worst intraday fall over the last 2 years. By contrast with the emerging optimism, its index steeply slumped to 97.85 and bounced back immediately. This sharp swing comes as no surprise. Easing geopolitical tensions take the shine off safe haven assets. Nevertheless, the long-term outlook for the greenback remains bullish. In the New York session today, investors were riveted to the US inflation data for February. Analysts suggested different forecasts, and pessimists warned that the CPI might conquer a 40-year peak. In practice, the gloomy forecast came true. The annual CPI jumped to 7.9%, the highest level since January 1982. The USD CAD pair dropped yesterday in parallel with the oil market for the same reason. Geopolitical tensions somehow eased and the oil prices tumbled. Despite the fact that the oil market is poised to resume its rally, the USD CAD pair is likely to carry on with its downward correction. It's ready to test support at 1.2755. The long-term outlook for the currency pair is its bounce and further growth because of geopolitical risks. If diplomatic efforts of Russian and Ukrainian foreign ministers fail again, the USD CAD pair is set to trade higher. Bitcoin spiked to 42,000 yesterday, thus confirming its correlation with the high-tech stocks. And today, the flagship crypto moved downwards. The medium-term outlook remains bearish, hence the digital token is expected to decline to $37,500 in the short term, and the next move is either a further drop or another attempt to jump as high as $45,000 per token. To sum up, global financial markets are still vulnerable to the developments in Ukraine. Markets are trading under extreme volatility. It's too early to speak about an actual trend reversal. See you tomorrow.